Wonderful. Okay. Good afternoon, everybody. Who here has been to Tanzania? Those of you who haven't should, and hopefully you will after this. What I'm going to talk to you about is tangibly making a difference in one country through domestic gas to feed a burgeoning demographic dividend. First thing I need to do is press slide forward. Everything I say is going to be circumspect for the next 9 minutes. So with that in mind, a very high-level view of who and what Wentworth is. I think, this world of ESG that I think Peter mentioned this morning is first and foremost. In Tanzania, we are one of 2 providers of domestic gas to the country. Domestic gas provides upwards of 60% of the energy mix in the country. About 50 million people have 1,500 megawatts versus South Africa, with 50-odd million people, has 49,000 megawatts. Tanzania wants to become an industrialized economy. Its GDP is growing very, very rapidly, around 7% per annum at the moment. We have a single asset, Mnazi Bay in the south, on the border with Mozambique, 2P reserves net of around 100 BCF, and an NPV 15 2P of around $106 million. We're producing and have been now on plateau for about 18 months, between 70 and 90 million cubic feet a day. Stable OPEX, quite low at 64 cents an MMBTU. The price is CPI linked at around 319 at the moment, but we're making decent margins with minimal CapEx exposure in the next few years. More importantly, we have around 1.5 TCF on block of potential. As a company, our focus is almost overwhelmingly and primarily East African domestic gas, pure play, market cap of around 46 million. Critically, we have a unique institutional register with Vitol, with Sustainable Capital, AXA, Invesco, and Fidelity on the books. Very, very unusual. We have near-term catalysts to lift the production in the field and also to materially change the production of our position in Tanzania. Ultimately, we want to aspire to be a regional gas champion in country. I think finally it's also important to say we're also trying to kind of step aside for some of our peers by actually evidencing directly to the market fiscal discipline in the way of providing a capital returns policy. We've just initiated a maiden dividend with a 6.7% yield. We intend for that to be sustainable. It's based on residual free cash flow, but we're receiving revenues and have been doing so continually since June 2016, and we're very comfortable we can sustain that revenue capital returns model. The Mnazi Bay asset itself has about a TCF in place and another 1.5 TCF of prospective resources, which are all proximal to the existing field, which has 5 producing wells. They are dome completions. There are a number of unperforated zones behind pipe which can be brought on stream to increase the production. But of course, there are also always commercial triggers to enable one to do so, and the primary commercial trigger for us is an extension. So our current GSA and production license runs till 2031. But clearly, if we want to drill more wells and unlock that prospective resource potential, we'll need confidence on an extension, which is one of the big commercial priorities for us at the moment. We are a non-operating partner at the moment. Morel and Prom is the operator. They are owned by Pertamina, the Indonesian NOC. You can read between the lines. We were an operator once, and we'd certainly aspire to be an operator again. Critically, in Tanzania, the macroeconomics drives everything. So the demographic dividend is really behind a huge kind of demand tsunami that is coming at us over the next 5 or 6 years. The offshore LNG projects that are operated by Shell and Equinor of some 43 TCF are not going to come on stream until probably late 2029 or the early 2030s. There are only 2 suppliers in country for domestic gas at the moment. The infrastructure is in place. There's a 465-kilometer pipeline with 760 million cubic feet a day capacity, which is only 15% utilized. There are sanctioned projects, gas-to-power stations in Dar es Salaam coming on stream in the next 3-4 years. And as I say, only 2 suppliers. So it's a very unique kind of situation in Africa where you have infrastructure, You have demand that's sanctioned and coming at you, and you basically have the opportunity to supply that demand with limited competition. So a lot of what we're doing on Mnazi Bay is to address that coming tsunami. I think it's important to not just put a slide about ESG or not just put a report on your website, but to actually live the statement, live the concept, live the framework. One of the things that Wentworth has done for a very long time has had a very close linkage with the Wentworth Africa Foundation, which has sought to build school libraries, to address sanitary hygiene, to promote secondary schools and individual students through their time in the region in which we work. Similarly, sustainability, domestic gas is a critical transitional fuel with relatively low carbon intensity. In fact, the LNG projects offshore the same gas. Shell's project has the lowest carbon intensity in their whole global portfolio. So one of the things that's important for us is to actually make a difference. We're keeping the lights on for over half of the population in the country, and that's actually very, very satisfying. And obviously, we're on AIM, so we're almost under more governance scrutiny than you're on the main market. So that's a kind of given. So to close up, we, like most of our peers, we're valued at 46 million. Our assets valued about 106 million. We're at a substantive discount to our asset valuation. We're in a demand-led market. We see opportunities to grow our position, not just in the asset, but also out with the asset through joint ventures with TPDC, the national oil company. Unusually, we have a robust shareholder roster. Vitol in particular, a cornerstone investor who we work very closely with. Sustainable Capital, particularly in South Africa, obviously only really focused on sustainable solutions to the energy story. What we're trying to do is kind of find a niche position in Tanzania and East Africa in the domestic gas market, which we see huge potential for in the next 10 years, to unlock and be a regional gas champion. Tanzania, for example, has a stated intention to be a regional gas supplier for Rwanda, Burundi, Uganda, and Kenya in the next 10 years. And a lot of that will come from the domestic market obligation from the LNG projects. But prior to that has to come from in-country. There's huge prospective resource that is near infrastructure along the main national gas pipeline that we certainly intend to work with the national oil company in terms of unlocking and moving forward with them on. We've been there for 8-9 years now. We're harvesting on the asset, and we're using that kind of plateau and sustainability of revenue receipt to initiate a dividend yield of the order of 6.7%. We issued the first interim a couple of weeks ago, and we intend to move forward on that capital returns policy on a kind of residual free cash flow basis. But we are very comfortable we can maintain that. And I think really that's it. So East African domestic gas is where we're focused on. Huge niche, huge demand, huge potential. Thank you.